Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is editor and publisher of the Gloom, Boom, and Doom Report, Dr. Marc Faber. Thank you for joining me again.
Well, thank you very much for having me on your program.
I enjoy our discussions so much, Mark. They're excellent.
Thank you very much.
I remember when you were predicting that quantitative tightening would end in a year, so you nailed that prediction almost perfectly.
Well, I was surprised that they started with QT, but when they started with QE, in other words, in 2008, I thought that this would be quantitative easing unlimited, because once you go down the path of printing money, it's very difficult and only associated with incredible economic pains that you can stop it.
So do you think then this stock market rally, is it a bear market rally? Is the bear market over? And did the Fed and other central banks cause it?
Well, there are different definitions, but I think in my mind, the most embarrassing moment for the Federal Reserve would be if the stock market would rally and make new highs and unemployment would hover around 15–20%, because that would really show the world that quantitative easing is actually not necessarily good for the broad economy, for Main Street, but it is good for asset holders, for Wall Street and the ETF industry and so forth. And that would be quite an embarrassing event.
Yeah, a lot of people on Main Street are still losing their jobs. We have, over 33 million people have filed for jobless claims in only 7 weeks, and yet the asset prices are rallying.
Yes, it's unbelievable. But, you know, if you print money, something will go up. And if through government regulation you shut down the real economy, then I guess that the money that is freshly printed goes into the few sectors that are still working, like we are using today Zoom, that is still working. And the many companies like Netflix, they actually benefit from the shutdown. Or Amazon and these type of companies, they are beneficiaries. But in general, I think overall for business, this shutdown is a disaster.
Yeah, I completely agree. The economic damage is going to be way worse than the amount of people infected and the amount of people that die from the coronavirus.
Absolutely.
So do you think then that we're going to see a lot more bankruptcies of Main Street businesses, small businesses, restaurants, bricks and mortar retailers, hotels, travel, tourism, those types of businesses?
I think small businesses, a lot of them will not reopen. And it also depends on these handouts the government is giving out. You know, we have essentially this CARES Act. This is the number one support measure, which will be followed by support number 2, by support number 3, and so forth. I think eventually we'll end up with a basic income where a large segment of the population will not work and live in on essentially small handouts that the government is giving them. And so you have a submissive population that depends on the government, and so they have to accept the government. Freedom will be gone.
Do you think student loan debt's going to get bailed out? Is the Fed, because the Fed's trying to weaken the dollar index is staying stubbornly strong from where President Trump, the Treasury, and the Fed want it. Do you think eventually they're going to start creating new programs to spend even more money, send out more checks, and do even more bailouts, like wiping out student loan debt, bailing out states and municipalities, that this is going to keep going on as long as the dollar relative to the other currencies looks somewhat stable?
Well, I mean, there's a lot of talk about zombie companies that have been bailed out essentially after 2008, which shouldn't not have been bailed out through money printing. And the zombie company phenomenon is coming up again now, with a lot of companies without bailout money, they be forced to the wall. But I think the big problem will be states. There are lots of zombie states, zombie municipalities that have a vast number of pension funds that are badly underfunded. And I think the federal government will have to bail out these people.
It seems, Mark, that there's a cash flow problem pervasive throughout all levels of society. So the Fed and other central banks, they can move the stock market and corporate bonds and other asset prices up, but this doesn't solve the cash flow problem because, like you said, states and municipalities, they need tax revenues. That's part of cash flow. If there's not normal economic activity, then there's no cash flow for the states coming in for taxes. There's no cash flow for small businesses. There's no cash flow for people for their salaries or to pay bills.
Well, there's no cash flow on bonds. If you have next to zero interest rates, you have $1 million bond portfolio, you get maybe only like 1% on your bond portfolio per annum. So there's no cash flow there either. And as you know, a lot of high dividend paying companies, they have been slashing their dividends. So there will be also less cash flow there. So I think that this point you're raising about cash flow, you can boost asset prices, but it doesn't mean that the cash flow increases. And this cash flow deficiency is actually partly caused by the central banks, not only in the US, but worldwide, by having essentially driven interest rates to artificially low levels.
Yeah, financial repression, and these central bankers are causing, and politicians too, with all these wage and price controls and all these laws, they're causing unbelievable amounts of distortion. So some prices are going up, some prices are going down, but things are so distorted, Mark, that people are buying bonds for capital gains and stocks for safe income. I mean, for over 100 years of finance, it used to be the exact opposite.
Yes. I mean, I had a chat a year ago with an economist. He told me flatly, Mark, I'm not buying treasuries for the interest. I'm only buying treasuries for the capital gain, because he believed in deflation. And I understand his reasoning, but the traditional bond buyer bought bonds because of the interest he received on the bonds, and because of lower volatility in bonds than in equities.
Also, Mark, it seems a lot of these guys are trying to they're all short-term oriented, myopic. They're all just trying to front run the Fed. So they're trying to front run the ECB. They're trying to front run the Fed. So they're buying these bonds, like you said, for capital gains only, but they expect the ECB to buy these bonds. They expect the Fed to buy these bonds.
Yes. But on this subject, I just want to bring up one point that I think is important. You brought up before the subject of the dollar being strong. This is correct. The bond market has also been exceedingly strong. I mean, if you bought a long-term treasury, say last October, up to now, you made about a 50% capital gain on long-term treasuries, on the 30 years treasury. So it's been a fabulously well-performing asset. But I'm asking myself the following question. The dollar is unlikely to stay strong forever. Now, maybe it stays strong forever against the Argentina pesos and the Brazilian real, possibly. But I doubt as a currency that, given the deficits we have, given the financing needs the Treasury has, that the dollar will be a strong currency forever. So I'm asking myself, what happens if one day international confidence in the US dollar wanes and international holders of dollars, and there's a lot of dollars floating around the world, if they decide to get out and simultaneously they decide to get out of US dollar bonds, then you could have a perfect storm. And I suppose that in that situation, the price of precious metals and bitcoins and the likes would go up substantially, I suppose.
Well, right now the Fed is getting away with buying all these treasuries, right? So instead of these foreign governments and foreign central banks dumping their treasuries, the Fed set up this global repo so they wouldn't dump their treasuries, so interest rates wouldn't rise. The Fed is buying with their official balance sheet, increases an enormous amount of US treasuries in proportion to what they're buying. And now the US Treasury just announced that they're going to need to borrow $3 trillion, a record, in the second quarter 2020. And then they're projecting an enormous amount too for the third quarter.
When I grew up, the number trillion in economic terms did not exist. Already then, $1 billion was a lot. Most bond issues in the 70s were for $25 million, $50 million was a relatively large bond issue, 100 million, a very large bond issue. But a trillion, we never talked about the trillion. So, I mean, this is amazing that we are dealing with trillions of dollars nowadays.
Well, look at all the inflation in consumer prices. Food prices were a lot cheaper back then too. And it's shocking that the dollar index is, we're doing this interview on Friday, May 8th, the dollar index is still almost at 100, it's at 99.69.
Yeah, sure. But part of this is that the other central banks around the world are as bad as the Fed or even worse. And this year alone, we're not talking about a year, 12 months. We're talking about essentially 5 months. We have the Brazilian Cruzeiro down 30% against the US dollar. The Russian ruble, Turkish lira, and so forth, they're down like 20% against the dollar. So we have a lot of currencies that were very weak. And for these people to be in dollars, say well-to-do people in Brazil, for them to be in dollars is wonderful.
Yeah, President Trump can't be too happy. I mean, he's tweeted a lot about the strength of the dollar for over a year now. He tweets about it all the time. So I'm sure behind closed doors, he's chewing out Jerome Powell and the Treasury Department, Steve Mnuchin, even more than what he's tweeting.
Yeah, maybe. And I mean, you said before that everything was grossly distorted in economics. This is correct. Basically, next to zero interest rates allows the government to spend an unlimited quantity of money because it doesn't cost them anything or cost them very little. But as I said, one day you'll have the perfect storm when the dollar goes down, interest rates go up, and so forth. And then the money printing will have to grow exponentially. And that will then cause further dollar weakness and further weakness in the bond market. I mean, there'll be a crisis. We're heading towards a crisis. But of course, maybe the crisis is only going to occur in 3 years or maybe 5 years, and maybe it will occur already by year end. Who knows? I think that under these conditions where you can see what the governments are doing and what the central banks are doing is simply not sustainable in the long run. That we have to be clear. So as an investor, you have to try to protect yourself from a bad outcome.
Yeah, I completely agree. And unfortunately, we're in an environment where these governments and central banks and highly paid bureaucrats, they can keep changing the rules. Look at all the different rules for the gold futures contracts on the LBMA and COMEX. I think there's been a half a dozen rules changes in just the last 4 or 5 weeks.
Yes, people always talk, oh, democracy is such a great system, and dictatorships are horrible and so forth. But we live under a dictatorship, and I wrote an article about this, a report about this maybe 5 years ago. And the title was the dictatorship of the professors. The academics, they kind of run today economic policies, monetary policies, fiscal policies at the order of bureaucrats. As you pointed out, it's no longer just the president. You know, the president probably has very little power, but people behind the president, at the CIA, at the FBI, at the State Department, and so forth, in every department, there's a very powerful bureaucracy, which is very difficult to unseat.
Yeah, I completely agree. Look what happened with General Flynn and all the stuff that's coming out now that the FBI and the others were doing.
I mean, I think this General Flynn case is like out of a book by Kafka, where the bureaucracy is such a dominant force that they can essentially frame someone and discredit him very badly. I mean, this Flynn was not just an ordinary soldier, he was a general.
Yeah, it's very disheartening. I've lived outside of Washington, D.C. now for 20 years, and I've just heard so many stories of corruption, but it's both political parties and the bureaucracy doesn't want any change. So every time a change candidate, whether it's Republican, Democrat, Libertarian, Independent, comes here to D.C., they get offered money, normally money to
Yes.
not change.
Yes, I'm sure that's true. It's actually, in a way, sad the way democracy was hijacked.
So I want to transition now to commodities. So do you think we're going to see $2,000 announced gold prices in the near future? Because you said that the Fed balance sheet is going to $10 trillion in the not too distant future. I think you said 12 months or less. So do you think then that the gold prices are going to be correlated to central bank balance sheet growth?
It's funny, there are days when I feel the gold price is going to correct on the downside. And then there are days when I feel it's about to break out on the upside. The trend has been up, but I have to say, I don't think that the market action of gold and silver is particularly strong. It's been going up, I admit, and I'm happy about it because I'm a gold holder, whereby I don't value my gold. So I just have it as an iron reserve or a golden reserve, as you would say. But given all the money printing, gold maybe should be higher. But as we discussed before, you know, this printed money can go into different things. And the NASDAQ is actually, as of today, up on the year. So it's performed from the lows in March, on March 23, it's performed fabulously well. And gold has been in an uptrend essentially since last October, or specifically more precisely since December 2015. But the rise in gold prices, in my opinion, hasn't been that impressive.
These NASDAQ companies, Mark, they pulled their guidance. So these companies have a cash flow problem too. A lot of them have cash though for now, but their cash flows have evaporated. They're telling everyone it's temporary. They pulled their guidance, and yet these stocks are still rallying. It's what, a handful of stocks, is mostly the FANG stocks.
Yeah, the FANGs are down maybe 5% from the top. And I think there's a good chance that the market will make a new high. Not every stock, but you can have 5 stocks being very strong: Amazon, Apple, Netflix, and so forth, Google. and they could drive up the indices.
Do you think the Fed did an enormous corporate bond bailout the first week of April? Because I don't think a lot of those corporations that raised a record in a single week, over $110 billion in corporate bonds, I don't think they would have been able to raise anywhere near that if the Fed had not issued all those press releases trying to backstop the junk bond market, the corporate bond market, the junk bond ETFs, the corporate bond ETFs, all these different things.
Yes, I agree, but I think there's nothing wrong if a central bank says, we're going to see to it that the market remains operational. And I think there was this moral support coming out of the Fed that induced buyers to come out and buy these, in numerous cases, very low quality bonds. I mean, I personally, I'm not sure I would buy a bond by an airline or by a cruise ship company.
Yeah, and look, ExxonMobil issued a lot more debt at barely above Fed funds rate. I think it was 75 basis points above. Apple got a discount. So Apple recently also raised a bunch of debt and they got a discount. So it's insane the capital raises that these CEOs are doing, and it's almost a lot of it's almost all debt.
Yes. If the government essentially tells you we're going to bail out the corporate sector, it induces corporations to retort to imprudent financial structures. That's why we had in the last few years all these stock buybacks. They're not illegal. You can't say they're immoral. No, they are induced by essentially expansionary monetary policies and artificially low interest rates that give a corporation the incentive to leverage up and buy back shares.
What worries me, Mark, is if the cash flows for these companies like Apple, let's say people don't upgrade to either brand new iPhones or newer iPhones in the next 6 to 12 months, everyone's assuming that we will be back to somewhat normal levels of economic activity in the not too distant future. If those cash flows don't come back, there's going to be big, big problems 6 months, 12 months from now.
I agree. I mean, that's why I think we may make a new high in the stock market, but I don't think it would be a healthy new high. And I think we'll have to pay for the money printing at the later stage. I mean, the government has no cash flow. They're cash flow negative. Otherwise, they wouldn't have any deficits. The states are cash flow negatives. The municipalities are cash flow negative. The whole thing is like built on hot air.
And that's why all these governments now are discussing going after an online national sales tax. I think Thailand and some other Asian governments were just discussing that. It was a Bloomberg piece out earlier this week. So these governments are seeing that people are not going to shops, they're not going to restaurants, they're not going to bars, people are buying online. Governments are saying, well, we need to start taxing that now. We need to go after those tax revenues.
Well, in Thailand, they had the wisdom to introduce some kind of a wealth tax in the form of a land tax. So if you own land, you have to pay tax now. Before you also had to pay tax, but very low tax. And now you have to pay a much higher tax, actually a significant tax, I'd say. But you can avoid it if you plant agricultural products like bananas. In our case, we planted now on our land 3,000 trees, teak wood. And with that, you can reduce your tax. But you understand, if everybody plants bananas, the price will completely implode and it will hurt the farmers.
Yep, unintended consequences by government with bad policy, bad incentives.
Yes, look, I was just thinking the other day, we know that socialism failed, and we know some of the reasons why it failed. And each time there is a crisis in the Western world, there are books and articles that appear that essentially describe how capitalism has failed. I don't think that capitalism has failed, but I believe that government interventions destroyed the pure capitalistic economy, which I admit is very cruel. It is unfair to some people. Is it fair that someone does well and someone goes bankrupt? Well, is it fair that someone is good at school and somebody is poor at school? Or is it fair that someone is a good football player or soccer player and another one can't play football or soccer in a million years? This is capitalism, where through the market economy, you essentially get the fittest at the top and the others don't make it. And it's an unfair system. But in my opinion, it's much fairer than, say, some bureaucrats sitting in an office in Washington or in a state capital telling people what they can do and what they can't do, and how much each person should earn and so forth, and how much money is being distributed. So I think the capitalistic system hasn't failed, but it's
unfairly blamed.
Government regulatory framework that is incompatible with a capitalistic economy.
Yeah, I agree. I think capitalism is just the punching bag. It's unfairly blamed for all mistakes that government, central planning, central banks, government, highly paid government bureaucrats are doing. Look, they're clearly, Mark, for the last couple months, picking winners and losers. Who gets what bailout? Who gets what low interest rate loans? So the average person on Main Street who's an employee or a small business owner, they're at the back of the line. They're getting scraps. If they've even gotten a $1,200 check already, one stimulus check, one measly check, or a SBA loan. I mean, I've heard anecdotally people who have been waiting and waiting and waiting for a long time for an SBA loan and haven't gotten one.
Look, it's physically impossible to distribute these SBA loans fairly. It's not possible. And there's a lot of abuse. And in my opinion, this bailout benefits, as was the case in 2008, 2009, it benefits Wall Street the most. This is my view. It's a gigantic, I wrote a report entitled "The Greatest Theft in History." This bailout is a huge theft, and it doesn't help Main Street much.
Did you see that hedge fund managers were applying for SBA loans? That's like one of the worst things I've seen.
But I understand that they do it. Strictly speaking, they should be able to get them, strictly speaking. And some universities' endowments also received loans, but they gave it back after it was disclosed by newspapers, and there was a public outcry. But this is the way a planning economy works. It's a very unfair system. That's why I said from the start.
Yeah, unfair, and let's add corrupt in there.
It leads to massive corruption, and there is an element of vote buying behind the whole thing. Don't make a mistake about this.
Oh yes,
I think Trump, he's basically in the camp of a capitalist mentality-wise, but equally he wants to get elected. He will do whatever he can get some votes with. He will blame China for the COVID-19 virus, and he will blame China for everything. And that resonates with the typical American.
And he will manipulate the stock market higher, right? Because if the stock market crashes again before the November 2020 election, I'm pretty confident that that will hurt his re-election chances.
Well, it's funny. I was kind of quite convinced 6 months ago that he would win the re-election. Now, I'm not so sure. I think he has hurt himself with his continuous contradictory tweets.
Yeah, he's tough to read sometimes because he can do a 180 very, very quickly.
Yes. And also, if you look at his pictures when he comes on TV or he gives interviews, I think his face does not resonate victory anymore. At the beginning of his presidency, he was a very convincing, George Soros would call him a clown or a charlatan. Now, somewhere, somehow, he's not as convincing as he was at the beginning. And I think he knows that his re-election is not in the bag. It's maybe and maybe not.
Well, a lot of his policy decisions are similar to what Herbert Hoover and FDR tried in the Great Depression in 1929. He's pulling a lot of the similar tactics.
Yes. Anyway, but coming back to investors, you know, what they should do with their money. I don't think an investor should put all his money into precious metals. But I think under the conditions we live in, I would have about 25% in precious metals or even more. By precious metals, I mean gold, silver, platinum, and related shares. I mean, the GDX, the gold mining ETF, is much lower than it was in 2011. It's about half as high as it was then. And I believe that if the gold price continues to go up, and I suppose that it will go up over time, not in a straight line, and maybe we have in between significant correction. But if it goes up, then I think the gold ETF would be a desirable vehicle to own in your portfolio.
You mean the gold mining stock ETF?
Yes. And the other thing that I have to say, you know, we talk about the stock market, but actually there are two stock markets. There's a stock market that is represented more by the Russell 2000. And that one peaked out in 2015, essentially, and has been going down. And you have a lot of companies in the US that have been down maybe 80% from their highs in 2015, 2016. In Germany, you have Daimler. I'd say among automobile companies, Daimler is a high quality company. And the stock is down from 90, went down to 21, and is now 31. But it shows you the severity of the bear market in certain shares, which does not show up when you look at the indices. And similarly, in the US, you have the oil sector and the oil servicing companies. The oil servicing companies, in my view, maybe they will not thrive and do fantastically well, but they'll survive because someone has to service the oil industry. The offshore rigs and the offshore vessels, all this has to be serviced regularly. So I think that the oil servicing companies are okay. And then you have the financial sector, the banks that are relatively depressed. And as I said, I think that the major beneficiaries of all this are essentially financial institutions. And so I have not yet a clear buy signal on the banks, but I think they're bottoming out here. And without a rally in banks, the market isn't going to go very far. A normal bull market requires the participation or the leadership of financial stocks. And so I think that investors should own some of the assets in banks.
What worries me, Mark, is negative interest rates. So if these other governments start to copy what happened in Europe or Japan with real rates, with negative interest rate policy, you know, the banks, they may have some savers and people with accounts start to pull capital out. And then you start getting into cat and mouse games with governments and regulators where they start to try to force capital into the banks.
Yeah, I understand that, but don't overlook the fact that Wall Street has a lot of money, and it is a very powerful lobby, very powerful lobby. And I don't know who the paymasters are of the Federal Reserve, but I think the Federal Reserve listens to Wall Street and to the hedge fund industry and to the fund management industry and so forth, to BlackRock, Fidelity, and all these people. So they have a lot of power also.
Yeah, I totally agree. Also, private equity was lobbying for bailouts too, which is just ridiculous. There's so many ridiculous things, Mark, that have happened in the last few months. We could spend hours talking about all the crazy things that have happened. So,
I mean, the worrisome thing is that ordinary people, and I suppose most of your listeners have some money, but are not in the billionaire class. But say ordinary people that have a job, they are doctors, dentists, architects, engineers, and so forth, have a salary, well paid, everything, they have some savings. When they see all this, they have to think, what the hell is going on? We ordinary people are getting badly screwed. You know, it's very disconcerting.
I don't think the average person, Mark, understands that what the Federal Reserve is, what it actually does. A lot of people know it moves interest rates. They don't know about all the different bailouts yet. Most people don't even know who the Fed chairman is. The Fed bailed out pretty much all the major hedge funds a couple months ago. So Ray Dalio, all these guys doing the leveraged risk parity trade, the basis trade, all those hedge funds doing that all got bailouts.
Yeah, I think so. Yes, that was the first repo crisis. That's why I think maybe this crisis is kind of engineered, and that this was used to inject a ton of money. In other words, the tune of $3 trillion or $4 trillion to bail out not just the hedge funds, but the whole system.
So will commodities eventually, a lot of commodities seem to be in a bear market right now. Copper prices have crashed because of economic activity and the Chinese economy slowing. Oil prices, seems that they're still in oversupply. Do you think these commodities will have a bull market in the near future? Or do you think there's going to be a lot more bankruptcies first from some of these oil producers and copper miners?
The big groups, I don't think there is a likelihood of bankruptcy for the likes of Glencore, BHP, Rio. That I doubt. And actually, I think these companies have a valuation that is probably attractive from a longer term perspective. I mean, if you take a 5 years view, but most investors actually don't take a 5 years view. If you take a 5 years view, as I mentioned, as an example, the automobile industry, if you take a 5 years view, probably automobile stocks are quite low, as well as aluminum, steel, nickel companies, and basic commodities like copper and so forth. All these companies are probably quite low if you take a 5 years view, because even if we have a depression, after 5 years we should be slowly coming out, unless we have someone like Greta running the global economy, who wants to go back essentially to the Stone Ages. But let's assume that after this crisis, we may have a war, and then demand picks up because of a war economy or whatever, then I would assume that these companies, these basic resource companies, are reasonably attractive. Current valuation.
Yeah, I think people have to be careful with individual oil companies. Their demand for oil will have to come back. If we're going to have normal economic activity at some point, oil will be used, jet fuel will be used, gasoline will be used, petrochemicals, plastics, all those things will be used at some point. And no one's making any money right now in the oil industry, so that's not sustainable. I don't know exactly when oil is going to bottom. You can comment if you think oil has bottomed already, but at some point it's going to have to, or all the oil companies are going to go bankrupt.
Well, I think when oil traded at minus $37, I suppose that was a long-term low. But we've rallied again, we've rallied again substantially. Now I think correction is going to happen in the oil price and will go down again a bit. But in general, we are closer to a low point than to a high point in oil. And I remember when oil was trading above $100 a barrel, the analysts were saying it will go to $150. And now they're all saying it's bad and it will go lower again and so forth. As with the stocks that I mentioned earlier, I think a lot of stocks are closer to long-term lows than to long-term highs. But I think it will just take time. And I think there was a great opportunity to make money in the stock market between 2009, the March lows, 666 on the S&P, and say 2018, 2019. From now on, maybe stocks move sideways like in the 70s, a possibility, or they'll go down again substantially, another possibility. That they would go up a lot, that I kind of doubt, given the fact that we already have zero interest rates.
Yeah, what worries me is negative interest rates. So hopefully that won't happen. But if the interest rates stay low for a while, there will be a lot more inflation. And once we get to normal economic activity with velocity money has crashed. So if velocity money starts to pick up in the not too distant future, in a couple of years, lending and spending in the real economy, we could see a lot more inflation down the line.
Yes, but the Fed actually wants inflation.
They have to be careful what they wish for, right? They want a certain amount of inflation, not really, really bad inflation.
Yes, this is the central planning economy. I want this, but unfortunately, it doesn't work that way.
Mark, I want to thank you so much for your time today. You've given my listeners a lot of great insights, also some very interesting stock picks for contrarians out there who are patient. If my listeners want to follow your work at the Gloom, Boom, and Doom report, how do they do so?
Well, they can go to the website gloomboomdoom.com, and then they can either subscribe to the monthly letter or contact us. But one last point I want to make, a commodity which has been overlooked but is coming back into the focus is uranium. And I think there is a deficiency of uranium. I suppose that the price could continue to go up and that this would be beneficial for uranium companies.
Yeah, a lot of uranium miners are offline, but then again, there's also a lot of the entire, I think, country of Mexico has all their mines offline. So there's a lot of mining offline right now.
Yeah, sure. Okay, thank you so much and have a nice weekend.